That's a good question. In the meantime, gold going down again today. Yesterday, it was up slightly, but it's off more than 17% so far this year. But our next guest is making a big call on gold, saying it's a good bet if you don't buy into Ben Bernanke's magic tricks. John Brown is senior economic consultant at Euro Pacific Capital, joining us now from Boynton Beach, Florida. Well, when's the inflation going to show up then?
Well, the inflation, Dagan, won't show up until what's happened with QE is that most people, including corporations, are storing it in bank deposits, roughly 4 trillion of bank deposits. That is part of the monetary base. That's not money supply. It's only when the banks start leveraging it up and lending it into the economy that it becomes money supply and therefore highly inflationary. So those people that expected high inflation as a result of the massive QE, when people were not going to spend it on consumer items or building factories but were going to keep it in the bank, were wrong to buy gold as a hedge against inflation. The people that were buying gold as an insurance against a financial catastrophe, such as a currency crisis, were probably right in the long term. And, of course, speculators got attracted into it. When the price rose 6.5, 7.5 times in 11 years, speculators came in. Now, the interesting thing about the speculators is they're traders. And they bought the paper gold, in other words, GLD, SLV for silver, and the ETFs. Whereas the long-term investors tended to buy bullion and, to a lesser extent, but still in aggregate, a huge amount of gold coins. And the interesting thing is now that the speculators are moving from the gold market into the stock market, fed by QE, that they're shedding the paper gold, the GLD and the ETFs, and so that's driving that price down. Meanwhile, you try to buy a gold coin, and you'll find you're paying jolly nearly $1,500 an ounce for the gold coin. So people are still holding on to their gold coins, and most of the mints in the world are weeks behind in the production of these gold coins.
But it doesn't mean that those owners will continue to hold on to that gold. And it doesn't mean that it can't lose. It is losing money. It's still losing value, is it not?
Well, it depends who you sell it to. You see, if you sell GLD, GLD is going down because speculators are selling it. That's a piece of paper. You have to own 100,000 of GLD to translate that into actual gold.
But the GLD owns the actual gold, though.
Well, it owns gold, yes.
It owns physical gold, so that then thereby that gold is worth less.
Yes, but no, not quite, because the GLD is a piece of paper. If I buy, I don't have 100,000 GLD. So if I change mine in, I can't get the gold. I can only get a piece of paper. And therefore, I would rather have gold coins if I'm investing in gold as opposed to trading. My trading account, I traded in ETFs. And the traders, I'm out of those. But the gold coins I still hold. I'm still continuing to buy because I think we're heading for a catastrophe.
Do you think we're going to have a global currency crisis?
Oh, I think when you think of it, if you think back to 2007, you saw the real estate crash, the banks too big to fail. They're even bigger now, piled up with derivatives and problems like that. And a currency crisis, suddenly it's all solved, and yet nobody's had any punishment, nobody's lost anything. It's all solved by the creation of false money. So do you think this is going to end well?
No, I don't think I'm going to hold my breath until I wait for doomsday, John.
Very interesting. Very interesting. You know, Texas University, they invested in gold bullion, and they not only took delivery, but they built their own vault to hold it. They didn't trust the government in any way at all. And I think they're right.
Because they're from Texas. John, thank you. Where everybody owns more than one gun. Kind of love that, though. I'd buy a gun over gold. Hey, John, thank you. John Brown, be well.
Buy the metal, not the paper.
Okay.
Let's go back to the